Welcome back everyone to another video by Fully Informed Trade, or Fi Trade for short. My name is Alex and I'm just going to go ahead and review the stock, commodity, bond, and Forex market. So without any further ado, let's go ahead and review the markets. First of all, dollar index has found somewhat of a double bottoming pattern on the charts at around $78. Now the risk to reward is much more favorable to the long side than it is to the short side. Main reason being is that the stock market will most likely be unable to sustain this rally, and the stock market finally decides to take a breather and has a pretty major correction. This market will go up in response, and because of that I feel more neutral to positive than I do neutral to negative. So more positive than negative as of this moment. Let's go ahead and look at the next chart, which is going to be the Euro US dollar. Euro US dollar, same story here. Once the stock market stops rallying, that in turn will cause certain. The Euro US dollar is really hard to say because back in June you'd have the Euro US dollar be really negative, stock market would be really negative, European stock markets were really negative as well. But as far as reclaiming its former glory as like a $1.50, 150 per euro per dollar, that's pretty hard for me to say. I don't see that really happening. I could see this market going back up to maybe around the 138 level, and then it could have a great opportunity, and it has a high probability of pulling back again. But I think this rally is short-lived considering the market cycle that we're in. Let's go ahead and look at the next chart, which is going to be the Dow Jones Industrial Average. Dow Jones Industrial Average, as you guys have already seen in the past many times before, it always takes a big engulfing pattern, top that with a certain reversal indicator like that, and then you have a great opportunity of going ahead and finding a potential short on this market. And as you guys have already seen, it could be an inverse hammer, it could be somewhat of a cross. But as anything that shows uncertainty of constantly buying is a great sign of potential selling in the near-term future. Let's go ahead and look at the next chart, which is going to be the gold market. Gold market has somewhat of a weak relief rally, and then it continues going lower. And that's pretty much what some people on Wall Street call a dead cat bounce. Dead cat bounce, what happens when a dead cat bounces, right? Let's say you dropped a cat off the Empire State Building, and it flies all the way down and it slams straight into the pavement. And the cat slams into the pavement and it jumps off that, or it bounces off that pavement for maybe up a couple feet. Okay, that's a dead cat bounce. It's like this market is falling off a 100-floor skyscraper, and when it hits the pavement, it jumps up for a couple feet, then it continues going lower. That's what a dead cat bounce is, because that's what people call a dead cat bounce. And I know that's kind of messed up, but I'll leave it up to Wall Street to make up some really jacked up phraseology. But anyway, let's go ahead and look at the next support level, which is around 1,285. And you have a great opportunity of finding some support there. Market will most likely find some support on that level, and that's a level that I really do not recommend anybody to go ahead and short. If you're a long-term gold investor, it might be a great opportunity. However, I would buy little at those levels. Let's go ahead and look at the next chart, which is the silver market. Silver market, same exact story here, but worse. Right, worse. Reason being, well, you see this slant on the candlesticks, right? Well, I see the same exact thing here. But how much has silver fallen in the past? It has fallen by as much as 50% due to speculative hype. Everybody comes on to CNBC. Just about every expert says silver, 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 silver. Well, me personally, I don't care. You know what? I earn a penny here. I earn a penny there. I earn a penny if the market falls. I earn a penny if the market goes up. And I'll tell you what, guys. You know what? Some people will sell others on this idea that silver, or this notion that silver could go all the way to the moon, maybe $100 per ounce. But if this market falls in my favor by around $5 to $4, how much would I make? I would make $100 per ounce. So pretty much I use leverage, and it's realistic enough for me to anticipate a $4 fall because I've seen it in the past. I've seen silver fall by 10 bucks in the past. So if I anticipate a $4 fall, which it always has happened, and it's already fallen by around heck, 5 bucks. Another $4 is a probability, and if it does fall by another $4, I would earn a tremendous amount of money. So much money that I would just squeal like a pig, I guess you could call it. Let's go ahead and look at the next chart, which is going to be the crude oil market. Crude oil market sideways, I would consider a trade only if it breaks below the 20-day moving average and you set up somewhat of a tight stop. Let's look at the next chart, which is going to be the USO. And the USO is pretty interesting. Right now, it has found some support on this level. It could bounce up a bit. And you know what? If you're playing a bounce, you buy it for a couple hours, and when you see weakness, you sell it. That's how you play bounces. That's a scalp. And pretty much there might be a great opportunity to scalp this market, and it would only be an intraday trade for that matter. So you probably see a quick bounce off it, you buy into it, and then once you see some weakness, you just get out of it and you earn a couple pennies off that. Let's go ahead and look at the next chart, which is going to be the bond market. Bond market. Well, pretty much bond market right around here. I anticipated a great opportunity at around 119.40, and currently 120.31 is the area. So anywhere around the 119s would have been just great, because now it's already trading into the 120 area. And remember, if we go ahead and look back to the 3-month chart, the higher end of the range is typically at around 121.50. So you got a bit more move. You have a little more room in this market for it to go a little more higher. Let's go ahead and look at the next chart, which is Texas Instruments. Texas Instruments just reported earnings today, and I feel that there's a double topping pattern right around here. So you guys go ahead and stay 34.85. Pretty much is your target area. If you see this market push that level again, what would you do? You would short it. You wouldn't buy it, you would short it. And guess what, guys? If you short at that level, you have a much higher chance of making money than you would losing money. That's the whole point of trading, guys. That's why you guys are here. You guys only want to take on opportunities that have a higher chance of succeeding than failing. Hint, hint. That's why you look for certain patterns. If we go back and zoom a bit, you guys will see that this is a potential double topping pattern. You see the market touch that a bit, and then you see a potential pullback, and if it happens, great for you. If it doesn't, you would only lose a couple cents on the dollar. But right now, more opportunity to the short side once it touches that resistance area. Next chart, Bank of America. Bank of America. Interesting days in Bank of America. As I've said before, and I'm going to continue to say again, Bank of America does have this weird market, this weird way of pulling back a couple days ago. If I go ahead and pull up the 5-day chart, you know, it had this solid bounce off a negative day, and then it went a bit higher, and then it went a bit higher still, and then it had a pullback finally on Friday, and then it just continues that negative momentum. And I was saying this, like, you know, chances are this is just going to be a short-term relief rally, and then you're going to probably see more negativity. You see this inverse hammer, plus you see this bearish engulfing pattern, and it finally closes below the 20-day moving average. And a bearish engulfing pattern is really negative because what is it basically? It goes from the top left corner of a day's trading session and it goes down to the bottom right. That's all a bearish engulfing candle is. And when you see those type of movements in a market, that is really bad. And overall, I consider Bank of America a trade to be on the short side at this point. And on top of that, I did tell you guys, if you guys own Bank of America, you're supposed to hedge your positions, buy stuff like FAZ, buy put options, or if you're a speculator, you just short the stock and earn a pretty good nickel off of it. Let's go ahead and look at the next chart, which is going to be International Business Machine, and this is my baby, because first of all, you know, some people were like, well, this is just a safety stock. Me personally, I don't consider IBM a safety stock. And the main reason why is that IBM has a mixed up history in the past where it has had awful quarters where it would lose millions and millions of dollars. But now it has changed its business practices and its focus is different. It's like kind of like the Apple story. Apple went from being a horrid company to a brilliant company. Same thing with IBM. It was an awful company in the 1990s. It would do a poor job of returning earnings, retaining return on equity. They would do an awful job in just about every category. And what happened now is that this company pretty much goes off and takes on projects from a business to business standpoint in just about every market, whether it be medical, financial. Chances are, I bet you Bank of America runs on IBM supercomputers or mainframe computers. Servers are most likely run by IBM. Next thing to consider, manufacturing. I've seen this company do many things in the manufacturing sector. Sometimes they just go in and analyze a manufacturing fab and consider whether or not these guys are more effective. They just do so much stuff. It's hard to say exactly what IBM does. But all I know is that IBM dabbles itself into a ton of businesses. Their earnings continue to beat expectations or on the higher end of expectations. Companies like Microsoft, when it reports earnings, it just barely beats the mean. Whereas when you look at companies like IBM, it's on the upper end of it. It's on the upper end of the earnings. For instance, if analysts are anticipating 120 at the high and 110 at the mean, and this is just throwing out numbers. This is not the real numbers. And the low at, like, let's say 78 cents per share. IBM is the type of company that would report it at around 119 or 122 or something like that. That's just the type of company it constantly is. Has been able to constantly report earnings that consistently beat expectations or reach the higher ends of expectations for the last 8 quarters, on top of the fact that this company has a 12 PE ratio, is supposed to have a 20 PE ratio. A 20 PE ratio would put this company at a $200 to $225 per share valuation. And also, if we factor in the earnings growth, this company should probably be sitting around $200 to $225 by the end of 2011. That's where I see this company, guys. Way up into the stratosphere, much further than this. There is much more room for this company to grow as they have continued to go into government projects, small business projects, medium business projects, large business projects. They fulfill their customers' need in just about every sector, and that's why I like this company, because they nick a dime and penny everywhere. That's all I want to go over for today, guys. If you guys want to use the same charting software, please be sure to check out the link below my video. And for all of you guys out there on YouTube, and you guys just happen to glance and find my video somehow, please be sure to subscribe, because there will be more for you every single day except on Saturday and Sunday. But just about every single day I will have more content for you guys, as well as and for you guys on Facebook. Be sure to tell your friends on Facebook about me, especially if they want to learn more about stocks. Anyway, all of you out there, thanks for supporting me, thanks for watching my videos, and please be sure to tune in for the coming weeks and months ahead.